Hello, Wolfpack. Ladies and gentlemen, history has been made once again. Right, I know I said it last week, title of my video is History has been made. Bitcoin had closed below the 200-week SMA. Well, Bitcoin has closed below 200-week SMA again, and quite convincingly, and also testing it and the vague area around it for resistance. And this is very well and very much history being made. Now, there was debate last week about, hey, potentially this was just a fake out, right? People were saying, oh yeah, maybe we're closing below it just as a fake out, and we'll get back above it next week. Well, we've just closed another weekly candle below it. We've closed actually a doji, or something resembling a doji. I wouldn't necessarily call it a doji, below it, which is actually a pattern of reversal, which kind of just is the market's way of just complicating things even further, because obviously a pattern of reversal or doji candle, recommends that or suggests that the price will go back upwards, and so maybe we get back above it. But I think at this point, it's very safe to say, and if we look at the shorter term price action, it's very safe to say that Bitcoin has very decisively, completely lost for 200-week SMA. It is gone, right? Why is this important? Well, it's important for a couple of reasons. The first reason is the fact, and actually mainly one reason, the first reason is the fact that the 200-week SMA has been the macro bottom indicator for the entire price history of Bitcoin. Look, I don't need to tell you guys this. You know, you guys watch the channel. If you haven't watched the channel, you probably know anyway. The 200-week SMA is this green line. It's a moving average. Basically takes in the last 200 weekly candle close on average, averages it out, and then moves with the price action, in that fashion. It's a mathematical formula. And so essentially, in the last few occurrences here in 2015, in 2018, and in 2020, it was the macro bottom, right? We didn't close very convincingly below it on any of those occasions, and so it would have been logical to assume, and I even at one point during the drop was assuming the fact that Bitcoin would probably hold this line. I recently said, I think up at around 30k, I said, look, it's probably not going to hold. And my reasoning for that is that I don't think the bear market's over, right? I think Q4 will be the bear market bottom. I've made this clear on many occasions. I think we do need to give some weight to this uptrending line, this yellow uptrending line. But ultimately, I still don't think this uptrending line is going to hold. I think that will break down as well. Now, I have said that I'm not necessarily too confident in any bear market prediction. That remains true. I'm not necessarily too confident in any bear market prediction because I don't think we have much data. Because the main piece of data we had was the data we're talking about right now. The main piece of data we had as to where Bitcoin will bottom in the bear market was the 200-week SMA, this green line, and that is lost now. So we have no data on where Bitcoin will bottom. It's completely gone. The only resembling kind of slight resemblance of data we have really is this macro uptrending line. And that's only played out on 2 occasions. And so I don't necessarily think that will play out on this occasion because of the macro situation. I think we'll drop below that. But it's interesting. We need to take a look at it. We need to continue watching it in the future, of course. But now that we've got over that, and now that we've kind of decisively, once and for all said, the 200-week SMA is no longer relevant for Bitcoin on the macro bottom. Bang, gone, right? We can really start to look at something else now. We can start to look at the shorter term analysis, and we can start to think, where are we going to go in the shorter term? Because longer term, we know, right? Longer term, anyone else watch the channel, which by the way is most people at this point, bear market, you don't really get many new listeners. If we look at the 4-year cycle, and we'll bring it up regardless, because we haven't looked at it for a while actually, the 4-year cycle is a macro trend on Bitcoin. You guys would know by now, dictated by the halving. So every 4 years, Bitcoin sees a halving. That kicks off the cycle once again. And the cycle is this: 1 year of bull market, 3 years of bear market. That is the cycle. And so I guess another way you could frame it is 1 year of bull market, 1 year of bear market, 2 years of accumulation. That's probably the way I would frame it. And we're currently in the first year, the second year of the cycle, which is the bear market, right? And so as the date range trend predicts, we will be bottoming out this bear market in Q4. That is what the date range trend predicts. And as the macro situation predicts, that kind of makes perfect sense, right? Because think of the macro situation. You think of the US economy right now. You think of the Federal Reserve. They're thinking on slowing down on the interest rate hikes or stopping the interest rate hikes in Q4. Now, that's taking their word without a grain of salt. And obviously, it should be taken with a massive grain of salt. But I think that makes a lot of sense. I think if the Bitcoin halving cycle dictates that or suggests that we'll be seeing a Q4 bottom and the macro situation seems to line up with the Q4 bottom, I think that is what we should be going with. And so at this point, I do not think the Bitcoin bottom is in. I think the Bitcoin bottom will be in Q4. Regardless of all of that, I think I'm more focused on catching the trend reversal rather than the bottom exactly, because I think the bottom is very, very hard to catch. And even if you're in the right ballpark range, even if we're in the right Q4 range, I think it's still very, very difficult to catch. If I had to guess, if I was forced with a gun on my head, I had to guess where the bottom would be, I would say 11.5k to 13.5k. And that's because that's a major resistance which was formed by the 2019 bear market and also during the 2018 price action. But at this point, I'm not going to go too deep into that because it's still a long way away, in my opinion. But yeah, that's where I think the bottom will be. So, now that we've established, well, we've lost the macro bottom indicator, right? The 200-week SMA is gone. And we're also probably a sizable amount of time away, at least 3 months away, which isn't really that long, by the way, away from the bottom, which is Q4, right? October to December. Where are we going in the short term? What's going to happen in between that point of time? And I think that's what we're going to be focusing on a lot over the next few months here. And the main thing we're going to be talking about in regards to it is this uptrending line. Because, yeah, I don't think the bottom is in, but one cannot deny the fact that this uptrending line is there. All right. And I think that acting like we're fully bearish right now while we're above this uptrending line is a bit illogical. I think once we break this uptrending line to the downside, which again, I think will happen, but once that happens, that's when you can start be overly bearish. I think at this point, we need to be optimistic to a certain extent. And the major resistance zone that I'm looking at for invalidation to my arguments is this red box. If we get above that red box, which is the top at about 33k, I would start to consider being bullish on the market again. But at this point, we're nowhere near that. And so, yeah, I'm still bearish for sure. But shorter term analysis. So what's happening here? Well, Bitcoin, all you need to do really is invert the chart. And you can see, again, this is going back to what I said. Even though I'm bearish, I don't think we should be overly bearish. I think we need to be optimistic to a certain extent. We are on an inverted chart, just to remove your bias, in a strong ascending channel formation. Obviously, the next step as per a descending channel formation would be a swing to the downside of a channel, or possibly even a breakdown to retest resistance, and then we might be swinging up later. But that's what I mean, right? That this just goes to show why I don't think being overly bearish is a logical thing to do at this point in time. Even though the 4-year cycle suggests that we don't bottom until Q4, even though the macro situation suggests that we don't bottom until Q4, we can't just lie to ourselves. We have to trust the charts, right? The charts say that we're not looking overly bearish right now. Now, zooming in shorter term, that's on medium term, but zooming into shorter term analysis, right? Maybe it actually is overly bearish for shorter term, right? Because if we're looking for shorter term, what can we really see? Well, we can see, in my opinion, if I had to draw it out roughly, something resembling some sort of bearish pennant formation. I'm just going to draw it out very roughly. I had it pretty good earlier today, but I deleted my chart. So we've got that yellow bearish pennant formation. We actually broke it to the upside, but then immediately we unfortunately formed some sort of ascending channel formation, right? And we actually broke that to the downside. And so since we've seen a downside break out of an ascending channel formation, we can actually assume that Bitcoin's going to trend downwards towards 19.7k. If it does that, and this is what we think is going to happen, if it does that, we would actually have formed an Adam and Eve formation, which is a triangular shape here, and then a curved shape here. That's an Adam and Eve formation. In that case, we would be able to take a measured move from the top of the eve to the bottom of the edge, or the neckline, and apply it to a breakout point. And in that case, we'd actually be targeting a retest of 17.5k. Okay, so I hope that makes sense, but I'll just explain it one more time. So essentially on Bitcoin, delete everything. Let's delete everything. What we have here is an Adam and Eve formation, reversed Adam and Eve formation, triangular pattern, right? Triangular pattern here, rounded pattern here. Okay, taking a measured move. We're probably going to be going down to, after breaking the neckline, which is here, the nearest support zone, which is actually the macro low we made here on the 19th of June, right? So realistically, if we're taking the short-term analysis very seriously, we should actually be seeing a retest of 17k or 17.5k probably within the next week, right? That's if we're taking the short-term analysis seriously here. 17.5k within the next week would be the shorter-term price target as per the TA that we're looking at right now. An invalidation for that would be a break above 21.9k. If we break 21.9k, we'd be basically trending upwards towards the top of the channel formation, which would be a retest of around 26k. But at this point, yeah, it looks like 17.5k needs to be retested, which would make a lot of sense, right? If we're deleting all these lines that I've just drawn here, it would make a lot of sense because generally when you see a sharp capitulation and when you see the first kind of touch of a support, even if you're going to be bullish, you generally speaking retest that support zone before doing something like that. That's even if you're going to be bullish. It's very rare that you see one test of the support zone and then bounce up, unless there's a dramatic shift from the market participants into being bearish to being bullish, which I don't see at this point in time. So yeah, I think at this point, we've lost the 200-week SMA. It's gone. We don't know where the macro bottom is going to be exactly. We have a vague indication it's going to be in Q4. We have a vague indication it's going to be 11.5k to 13.5k. None of that's really confirmed. What we can say is that the shorter term analysis is suggesting we go down to 17.5k. And what we can say as well is that the medium term analysis is suggesting we see some sort of dead cat bounce up to the upper 25k region. Up to the upper 20k region. Like the 20Ks region, so the upper region of that, which would be 26, 27, 28. and then probably a move downwards towards Q4. So yeah, at this point, I suppose the main messages I just give you guys, the main messages I try to encourage you guys to remember is that even though you might think the market is so bearish right now, just be optimistic, because, you know, at the end of the day, it's extremely difficult to catch the macro bottom. And regardless of how many indicators you have and how much evidence you have to catch it, it's very unlikely you actually catch it until a trend reversal. Okay, you know, human psychology is one of those things that gets in the way of this kind of thing, right? Even with me, even with catching the macro top, I didn't catch the top, right? The top was at 69k. I didn't catch that. I started saying at 66k, doesn't look good, and then I said at 63k, it's very unlikely to recover, and then I said at 58k, it's a bear market, right? Because you have to wait for a trend reversal. The trend reversal started at 58k. You know, we didn't catch it exactly at 69k. Why? Because it's basically impossible to do that. And it's the same thing with the macro bottom. So if you're expecting to catch it, you know, exactly, you're going to be severely disappointed, because no one is going to do that unless they're extremely lucky. And so that's why I'm saying that, hey, even though I've got my predictions, even though I say Q4, I'm just looking at the charts. I'm trying to stay as objective as possible. I'm trying not to let that, you know, oh, but the macro is so bad, flood my thought process every single time I think about it. Because yeah, the macro is bad, but you know what they say, it always looks worse before it starts to get better. And I still think Q4, but I'm just saying, just try and remain objective. Obviously, this is a given to a certain extent. But yeah, short term says 17.5k retest. Medium term says dead cat bounce. Longer term probably says we go lower. All right, so that's the analysis for Bitcoin. And before we end the video, I want to look at a few things regarding Wolves Crypto V.I.P, regarding the Crypto Academy, and regarding the BitGet exchange. If you go to my YouTube channel homepage and you click the join button, you can see all the perks we offer here at Wolves of Crypto for the V.I.P membership. We've got Altcoin Trading Signals, Prioritised reply to comments, a 2-hour video on market psychology, and access to my TradingView charts, all for just $28 USD a month, which is less than $1 a day. An absolute bargain in my personal opinion. Highly recommend you sign up to that. If you don't, keep enjoying the free content. And then, of course, we've got BitGet Exchange, which is the exchange we use for the V.I.P membership. We use this for futures mainly. Why do we use it for futures? Half the fees of Binance, non-KYC. We've got copy trading available if you want to copy some of your favorite analysts and influencers. I don't personally use copy trading. I think that it's important to use individualized analysis so you can take responsibility for your actions. We've got a reward center here in which you can earn up to $4,000 in rewards for completing a few tasks, and also in the futures exchange, the reason why I like it so much is because it has no scam wicks, right? You see on Binance, you see on Coinbase, liquidation wicks that are actually caused by the exchanges, by accident. Maybe it is by accident, I don't know, that kind of flush everyone out of the market, even though it had nothing to do with the actual price action. BitGet has systems in place to prevent these wicks, and so every single piece of price action you see will be authentic, and none of it will be the mistake of an exchange, which means you'll be able to trade with no kind of worries about the exchange screwing you around. So sign up there using my referral link in the description below. And then finally, we've got the Crypto Academy Become a Trader course. This is a course myself and Megawell Crypto created this year, right, during the bear market, essentially trying to teach people how to trade in a 10-unit format. So you guys can complete this. Once you buy the course, you'll have it for a lifetime. About 40 hours of content, 450 slides, 80 videos, everything you need to know about trading from start to finish. And once you complete this course, the ideal plan is that you'll be a competent trader who's ready to go out in the market and make some profit on an individual career-based basis. So that is very interesting there as well. Go to the website, check out some of the reviews on Trustpilot, and you can email us here at cryptoacademycourses@gmail.com, and we'll send you the payment information as well as the course structure and format and everything you need to see before making a purchase. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.